Hello everyone, welcome back to my channel. I'm Japan Life Hacks. I'm delighted to have you join me for today's video. In this video, I will explain about cash in bookkeeping. I believe there is cash in your wallets, such as 10,000 yen bills, 1,000 yen bills, 100 yen coins, and 1 yen coins. Of course, in bookkeeping, these are also referred to as cash, but there are other things besides these that are treated as cash. Let's learn about how to handle cash transactions. Now, let's get started. The first content. What is cash in bookkeeping? In bookkeeping, items treated as cash aren't limited to physical coins and banknotes alone. For example, these items are also considered as cash in bookkeeping. Postal money order and other people's check. A postal money order is a certificate issued when transferring cash. It's issued by the postal service and functions like an exchangeable voucher for cash. When it comes to other people's check, I will provide a detailed explanation in the following video number 4. Therefore, at this stage, please remember that if you receive a check from other company, you should process it as cash. When you take these to the post office or financial institution, you can exchange them for cash immediately. Therefore, in bookkeeping, they are all treated as cash. Furthermore, because these are considered equivalent to cash, they are referred to as monetary substitutes. Now, let's take a look at an example of a journal entry. Sold merchandise to Company A for 300 yen and received check. The journal entry is as follows. Debit, cash 300. Credit, sales 300. We make journal entries for the increase in cash assets and the increase in sales revenue. If you're unsure why this journal entry is made, please watch the previous number 2 video again. The second content. Cash shortage and overage. Sometimes, there can be a gap between the recorded cash balance and the actual amount of cash held. This often occurs due to errors in payment amounts or instances where payments are forgotten. Hence, regular checks are carried out to ensure alignment between the recorded cash balance and the actual cash held. If, as shown in this diagram, the recorded cash balance is lower than the actual balance, it will be adjusted with the following journal entry. Debiting cash adjusts the book balance to match the actual balance. It is important to adjust the book balance to match the actual balance. The corresponding account in this case is referred to as cash shortage and overage. This account name is a special account name that does not correspond to any of the 5 elements in bookkeeping. Now, let's take a look at the journal entry when the cause of cash shortage and overage has been identified. On January 1st, the recorded cash account shows 900 yen, but upon counting the cash in the safe, it amounts to 1,000 yen. The journal entry is as follows. Debit, cash 100. Credit, cash shortage and overage 100. On February 1st, it was discovered that the excess of cash amounting to 100 yen was due to the omission of journalizing the collection of accounts receivable trade. The journal entry is as follows. Debit, cash shortage and overage 100. Credit, accounts receivable trade 100. Since the reason for the 100 yen cash shortage and overage has been identified, we will offset and eliminate the account for the cash shortage and overage. By doing so, it will involve debiting cash and crediting accounts receivable trade, resulting in the correct journal entry. The third content. Petty cash. Petty cash refers to the cash provided in advance for day-to-day expenses in each department. As a form of cash, it falls under the asset category in accounting. The accounting department's cashier transfers petty cash to the supplies unit in each department. The daily cash payments are managed by them. Periodically, the supplies unit report the expenses to the cashier. Based on this report, the cashier makes journal entries. Now, let's take a look at an example of journal entries. The accounting department's cashier handed 1,000 yen in petty cash to the supplies unit. The journal entry is as follows. Debit, petty cash 1,000. Credit, cash 1,000. We decrease cash and increase petty cash as an asset. Next, the supplies unit paid travel expenses of 100 yen and electricity costs of 300 yen from the petty cash. The journal entry is as follows. At this time, there are actually no journal entries. The one responsible for bookkeeping is strictly the cashier. Only upon receiving a report from the supplies unit do they make journal entries. Next, the cashier received the report of payments from the supplies unit. The journal entry is as follows. Debit, traveling and transportation expense 100, utilities expense 300. Credit, petty cash 400. We'll break down the asset of petty cash and record expenses for traveling and transportation as well as utilities. Thank you for watching the video. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your comments are the driving force behind the creation of my next video, so please feel free to leave them. Thank you very much in advance. See you next time.